California's reputation for housing continues to get hammered. We have the worst homeless problem. We have the worst governor. And yes, we have the worst insurance commissioner. We're going over that next. Yes, we are going to go over that particular article as well as what's going to happen this week. What are all the big events? We're going to go over the Kobesi letter. And if you're out there and you're saying, hey guys, I don't understand why prices keep staying steady. We should be seeing this big crash. Well, I'm going to show you inventory numbers and it's going to shock you. All next on Real Estate Daily. Welcome everyone. My name is Troy. And every day we go over the latest news in real estate, housing, and the mortgage market. Now, before we jump into it, do me a favor, hit that subscribe button. I'm going to give you the best 5 to 10 minutes in real estate on a daily basis, what's called Monday through Friday. All right, guys, let's get right into it. You know, every Monday, first thing we start off with is the Kobesi letter. Kobesi letter gives us some of the main events that's going to happen this week. Let's go over them. So tomorrow is going to be November building permits data. Now this is for new builds, and be honest, right now, who's actually getting permits? Because the majority of these municipalities, they're closed. They're going through 2 big holidays, you know, Thanksgiving, and then of course there's, you know, Christmas, but most of them are just screwing off. They're skeleton crews, they're on vacation, they're 3 martini lunches, whatever. I don't care. What's more concerning to me is the consumer confidence data. Now, we know that right now the stock market's on fire. We've seen crypto on fire, and that greed is really up. So the greed and fear index is up at all-time high. Okay, or not all-time high. It's up extreme greed. So it's at the highest level. But is consumer confidence there, or is it just a certain portion of the residents here in the United States are looking at, hey, we're doing really well, our investments are popping off, but the rest of you are struggling? We're going to see that. Now, it's going to be interesting also on Wednesday's existing home sales data. Now, we've seen a lot of positive data come out. We've seen low inventory numbers. We've seen year over year and month over month, we're seeing the values of homes go up. So if you own a home, you've been happy with those numbers in the last several months. Now, here's the problem. Q3 2023 GDP data. Now, we need to take when we look at these numbers, and we've talked about this before, when you look at them and you put down to the macro, how much is the government propping up GDP? We saw like last quarter, we just saw that there's so much money the government is shoving into this economy that's causing it to be propped up. If you take that money out, you take what they consider they're adding jobs every week, which we don't see jobs anywhere they're adding, but they're saying they're adding jobs. That's why GDP numbers are up. So you take it with a grain of salt. November PCE inflation data is coming out. New home sales data. Again, new home sales are 9% of the entire market. They don't really reflect what is actually going on out there. It's a Wall Street number. It is not a Main Street number. Say it once, say it 100 times. All right. Before we jump in there, do me a favor, hit that subscribe button. I'm going to give you this great information all the time. Here is another post, and it just keeps coming over and over. It's 3 hours ago. It says potential home sales experience largest monthly growth in a year. Guys, we're seeing it. There's no inventory. And unless there's going to be inventory hit the market, then you're not going to see people go out. And there's, when they buy homes, they're buying homes for more and more. The prices are going up. There's more buyers than sellers. It's supply and demand. It's that simple. And a lot of you out there continue to get brainwashed by mainstream media or your favorite influencer saying that it's gonna crash. I've heard that now for 2 years. I heard it when the bird flu in March of 2020 said it. It's not done any of that. And we continue to see articles come out on what's the shortage of homes in the United States, even though we keep seeing all these BS politician crap in Washington, D.C. say, oh, we're gonna force all these hedge funds to sell off their single family residence. That's just posturing, guys. That's bullshit. All right, let's go to Logan Matsushima, and this again, that's on X. And this is what he shows you, man. This is very easy to read. All of you out there can see it. let's go here to the charts. This is existing home sales, right? And this is from, and we're going to go, I'll pull it all the way up from 2000 to 2023. 2024 is right here. So we're at 2023. Look at this. I mean, look at the housing numbers, right? Right here is when you had all the foreclosures. So when the lenders stopped lending, boom, they stopped lending on homes. Why? Because they were getting these buybacks and they were consolidating, and people and banks were going out of business. IndyMac gone, Bank of America getting crushed and then being bailed out. Wells Fargo getting $25 billion in bailout money. All wrote bad loans. And so what happens after they get the market crashes? Well, nobody wants to lend money out. They're much more cautious, and that's where we're seeing inventory at its lowest, right? Lenders wouldn't foreclose, figuring out, hey, we gotta figure out what's happening in the market. Never happened before. Liar loans were everywhere, and they're being called due, and that's what happened. Then you saw it go back up. Where are we at on this chart, man? This is crazy. Look at this. The only time it was lower for existing home sales in the last almost 24 years was when they didn't loan anything out. Today, they're loaning you everything out. Look at this, 3.79. I mean, there's 3.79 million when you're averaging 5 million homes on the market right here. We're not even close. There's just no inventory. The sales are brisk. Here in Southern California, every single county last week, that was December 7th through December 17th, we had more homes sold than we had active listings come on the market. We are all bouncing around all-time highs in Los Angeles, San Bernardino, Riverside, and Orange counties. We're just seeing it here. Right now, the only way there's a crash is if the lenders stop lending or rates go to 9%, and we'll get to rates in a minute. All right, so I started this whole thing off, I started everything off here on today's video about how poorly California has done with home insurance. And if you're out there and you're buying a home, that's a nightmare. If you actually have existing insurance, you've seen that a lot of your carriers have just canceled you because they want to move on. So let's break this out. It says, wildfire risk will continue to drive up rates for California homeowners, insurance commissioner says. Well, guess what, guys? 2023, we had very little wildfire. So what is the real issue that's out there that's causing people to run away? Well, let's be the first to say the commissioner has been just god awful. Him and the governor, Gavin Newsom. So we have Ricardo Lara being one of the worst commissioners I've seen in recent years, hurting real estate beyond belief. And of course, Governor Gavin Newsom is clueless about what he really is here for. Is he going to run for governor? Is he going to run for president? Or is he going to run as, the homeless commissioner? Because he's just done everything wrong in this state possible. We are the most impoverished state of all 25 states. We're one of the few states that actually crime has gone up. And according to the FBI, the three-letter agency, 13%, where most all the other states have gone down. It's just been a mess out here. So let's go read this article. Okay, this is an article from today, and it says, and we'll go jump into this. It says, Lara got together. If they raise anything over 7%, he has to have a hearing. And when he shows up at the hearings, they just boo him. I mean, who wants to be around this guy? It says, will Californians see an increase in insurance costs in the future? The only realistic answer is yes, Insurance Commissioner Ricardo Lara. And again, stop voting for Democrats that don't have any experience, or any politicians to say that. Has zero. This guy is now second term, and he continues to crush all the industries that he oversees. Told members of the Assembly Insurance Committee during a hearing in Pasadena Wednesday, increasingly availability of insurance is how we protect affordability. Bullshit. If you have it, it's open markets and it's capitalism. If you have all the insurers out here, all of them, they're going to compete with each other. If there's a lot of claims, well, then they'll turn around and they'll still raise rates. But guess what? They're still competing with each other. But when you come in, you and Gavin Newsom come in, You are the nightmares when you will not allow these insurance companies, State Farm, Farmers, any of these, to raise rates because you want to make it an issue for your election that happened last year. Well, then you just see the mass exodus right out the door. So let's go read what it says. Laura did not say much. Of course, he doesn't say much about rates could go up and might even begin to increase. As insurance commissioner, he is required to sign off on rate hikes and hold public hearings for proposed rate increases over 7%, like I said. Let's go put this up. After a high-profile exit of several large companies in California this summer, Laura says increases is necessary to stabilize the market. Well, you didn't approve the increases. They all left because they're losing money. Okay? All of a sudden now, there is only a few people out here and they're now charging whatever they want. It becomes less capitalistic and more Marxism. The state takes over and says, well, free markets don't work. Well, they all left you, that's why. And so we're gonna go and do it ourselves, but guess what? We have to raise rates too. That's exactly what's happening. Insurance companies will not return to California unless they're able to change rates that justify covering the risk and provide opportunities to earn a fair return, he said. State lawmakers acknowledge rate hikes may be necessary to keep the market alive in California. Guess what? If you would have let them raise and there was 10 companies out here, we wouldn't be in the situation we're in. But since you didn't know what you're doing, you tried to hardball them and they called your dumbass bluff and now they all left. Now what's left? The FAIR plan. Probably the worst of all time. Now the state is now the monopoly out here on your homeowner's insurance, and they have no idea how to run a company, let alone a state. So now, if you're out there looking for a home, one of the things that you have to consider is, how do I get homeowners insurance when the FAIR plan and the state is underfunded, understaffed, doesn't know what they're doing, and Ricardo Lara is nowhere to be found. So let's see what else is saying. Assembly member Jim Wood, a Democrat who represents the North Coast, says it's almost impossible for homeowners to get homeowners insurance. No kidding. Dump this doucher, okay? You know, if you're checking all the D boxes on the next election, you're not doing that. You're charging yourself hundreds of dollars more a month for doing that alone. You need to look at all the propositions and all the candidates. You need to read up on it. Do your own research. Stop just checking boxes. They're costing you money because they don't care about you. They only care about their ego and their ambitions and agendas to get up higher and higher. That's why I don't understand how Gavin Newsom is actually our governor. He has caused more money out of California's pockets than any governor ever, period. All right, guys, let's jump into the interest rates. Boom, here we go, man. So we're basically seeing it flat for conventional. We're seeing it flat for jumbo, but we did see a little bit of an increase, 5 basis points on FHA. I know that if you're out here in Southern California, you can, if you shop around enough, you're probably in the 6.3s, 6.4s maybe. That's significantly better than the high 7s that we saw. And that's actually spurred on a lot more people, more interest out there from buyers. I know that since interest rates have gone down, my phone's ringing a little bit. I'm trying to get out there to all my sphere of influence saying, hey guys, get this word out. We're at the mid to low 6s. And if we go into the high 5s, guys, game is on. I think first quarter, if that happens, game is on. Now, it's all going to depend on which way the Fed works on I believe it's the January 31st meeting that they have next, or the March 20th or so meeting that they have. Those are important meetings for the first quarter. If at all that the market feels that the Fed is going to lower rates on one of those, we're going to see high 5s, and we're going to see the market kind of kick back in gear, and buyers are coming back in. And I think we're starting to see sellers who want to move up or move out of state will actually start putting their homes on the market. So inventory should ease up a little bit, but the buying pressure might still be way overwhelming. All right, so let's go check the 10-year. bond, because that happens for tomorrow, right? So this is what rates are tomorrow. So last Friday they were 3.91. Now they're 3.93. So we're seeing little change on them. You know, the chart is kind of crazy. We actually probably went into the 3.9s here, 3.90, right around here. You know, right at that maybe 3.89, and then it kind of came up a little bit. Now it's cresting down again. So we're, let me go see if I can show you this. Days. So it's cresting down. It's taking a red wick right here. So we'll see what happens for tomorrow. You know, I think rates are going to stay steady here right now. They might even bounce up a little bit, and then they'll go a gear down lower, I think. You know, and it will become affordable in the first quarter that buyers will start to come back in the market. We see that, as well as, you know, the government has their county. They're raising the county limits on what they'll loan out to you on FHA and conventional. Those raises will then again spur people and spur, you know, home values to go up. And again, it's the government that's causing this. You know, it's not, you know, banks or loan institutions, anything like that. It is a government that keeps saying they're going to buy, you know, mortgage-backed securities with higher mortgage balances. Crazy, but I know it's true. Guys, thank you very much for joining me today. I really appreciate it. If you have any questions, please leave them below, or comments. I love them. Otherwise, you guys take care, and I will see you tomorrow.